Welcome back, AI curious folk, to AI Ramblings Daily on here, AI Reset to Zero, the podcast to help you think through AI, not just be flooded by all things AI. I'm Michael Parekh, your personal human AI guide. This is AI Ramblings Daily, episode 57, and let's get started. Today, the core theme I want to focus on number of items that are going on, are just closer to the downstream AI tech stack that I talk about a lot. There'll be graphics in the show notes, so you'll see it again if you haven't seen it. But it's a 6-box tech stack for AI that I talk about in almost every post. It corresponds to what Jensen Huang of Nvidia talks about as the AI 5-layer cake. The difference between his 5-layer AI stack cake and my AI tech wave is box number 4, which is data with all the training and reinforcement loops that really make AI AI versus all other tech stacks before. That's in the weeds, but it's a fundamental thing you need to really understand in the context of this AI tech wave versus all the other tech waves that I've been tracking professionally for the last 3+ decades, some of them at Goldman Sachs, where I was a partner and head of internet research in the internet cycle. Let's get started. The key take one I want to talk about is Taiwan Semiconductor, TSMC as it's better known. They are and I've written a lot about this in various AI-RTZ posts, they are essentially what make AI at the bottom of the tech stack. They are the entity that has the billions and billions of fab capacity where Nvidia and Apple and a whole bunch of others can get all their chips made that then go into everything we use, not just AI stuff, but the chips in our cars, the chips in our gadgets, etc. This is the fundamental company with gazillions of dollars that sets the cadence for the AI tech wave. And they're important to kind of think about, aside from the ongoing tussles that are going on between the US and China, etc. They are the foundational layer of the AI tech stack. So when they report their earnings, it's important to kind of note. And this first quarter was good to report. It meet and beat people's expectations. The net profit was up almost 60% year over year, over $36 billion. Their advanced chips that are over 7 nanometers were now 74% of their total wafer revenues. That's kind of interesting. Remember, this is the entity that already over 50-60% of their overall capacity over the next 2 or 3 years are spoken for by Nvidia, and the rest by Apple, and then everyone else after that. So these are the guys who basically throttle the world's AI capacity, not because they're sitting there trying to throttle it, but it's just the amount of time it takes to build these fabs and then deploy them and do the exquisite engineering. Probably the most complex things that humans have done on planet Earth in the last couple of hundred years, technically, is what goes on at TSMC and some of their equipment providers like ASML. I've talked a lot about that in separate posts. I'm going into the weeds just to kind of give you a sense to think through the immensity of what's going on here and how it affects everything that we're bombarded with in terms of AI all day long. So this is a very critical company, and there's geopolitics involved here, obviously, because they're sitting in Taiwan. China wants Taiwan. And, here's a country of 23 million people that it's being lusted for by a country with 1.4 billion people. And then China, Xi, and Donald Trump are supposed to meet next month for all these various grand talks, obviously all in the middle of the Hormuz Strait blockade stuff between US and Iran. But Israel in the mix. I'm throwing all of the stuff at you because it really comes down to somewhat what goes out at TSMC, not just in terms of oil and gas, which is constricted through the Strait of Hormuz, but also a lot of key raw materials like helium and so on that TSMC needs to continue to make the chips at the scale that they're promising. And in this quarterly results, they basically reaffirmed that AI demand is very strong, that they're all stops out in terms of the capacity setups that they have to deliver all this. And so there's a lot, they have all the investments in place to kind of make this stuff happen. My take here is you should think of TSMC as the Fed of the tech economy. The Federal Reserve, like in the United States, some of you may be familiar, they are the guardians of inflation. They try and keep inflation within a band, a couple of percentage points, and they raise and lower interest rates accordingly. TSMC plays kind of the same role for the entire technology world globally because they're the big provider of the fabs, as I said. And so they have to invest gazillions of dollars up forward that take 3, 4, 5 years to put in place to make all the chips in the first place. So if they don't put in capex above a certain limit and work harder, then the whole tech economy globally gets throttled a little bit. So they're trying to balance that for economic reasons. The Fed does it obviously to govern interest rates for the whole country of the United States. It's a loose analogy, but I think it holds. So they just think of TSMC as the Fed, as it were, and Nvidia and Apple and a whole bunch of others basically constantly are working with them to make sure they make as much of the stuff that they need for their product lines over the next 2 to 3 years. And so TSMC is basically making sure that they can meet the demand for all the chip infrastructure, and they're doing it node by node. And so there's still the single most important name in the world of AI after Nvidia. And of course, you need the model companies, which are further up the stack in boxes 3 and 4, Anthropic, OpenAI, Microsoft to a lesser extent, but Google, Meta, and of course, Elon's Grok. We're going to talk about them shortly. In fact, take number 2 today, xAI, which is Elon Musk's AI company that is embedded into SpaceX. The two combined, Elon is planning a mega IPO. I've written a lot about this, at least a $1.5 trillion market cap. I think one of the most relatively overvalued things out there. This is not financial advice, but as a former professional analyst, we can go through some of the parts. But that's what he's aiming for. xAI needs to really build a direct business around the infrastructure that they're building for billions of dollars beyond xAI's need. And so what was interesting yesterday is they announced a business deal with one of the hottest AI coding companies, Cursor, providing them with compute capacity based on xAI's infrastructure that Cursor can use to serve their millions of developer customers. It's an important peek at a potential strategy by xAI and Elon to build perhaps an AWS-like business. Some of you may say, oh, what the heck is AWS again? That's Amazon AWS, which was founded a couple of decades ago, and it's become the crown jewel of Amazon. It provides most of the revenues and actually profits, not revenues, at the company, and is the largest provider of cloud services out there. I've written a lot about them. The number 2 is Microsoft Azure with its cloud platform. Google as number 3 with Google Cloud. But the point here is that xAI is potentially showing us that they do have a strategy to market their huge investments that are ramping up in AI data centers and compute, which they can't all use internally for xAI. Remember, xAI serves mostly Twitter users, which are a few hundred million users, versus the billions of users out there who xAI does not have direct access to. Those are companies like Google and Apple, who each have billions of customers that they can distribute AI to. Elon has to figure out a distribution strategy for his tremendous expensive capacity. And what this deal with Cursor represents is maybe a little peek at where that might be going, growing stem from the ground of an AWS type of strategy. Take number 3, Google with Gemini, as I've talked a lot about, is in the pole position. Also with their Gemini AI, Gemini competes directly with OpenAI and Anthropic, both on the consumer side and the enterprise side. They also have a very important partnership where they're being paid over $1 billion by Apple to include Gemini as part of Siri. That should be up later this year. But the core thing that they announced yesterday was working with one of the prime robotics companies, AI robotics companies, Boston Dynamics. They're providing them Google Gemini as part of something called Gemini Robotics-ER 1.6, a lot of mumbo jumbo, that basically becomes the foundational AI substrate for all the more complex robotic things that Boston Dynamics needs to do in terms of gathering synthetic data to make the robots pick and drop things and so on. So this is an interesting strategy from Google where they want to be a infrastructure provider to companies like Boston Dynamics to make do the other layer further up the tech stack to make robotics happen as a millions of robots for consumers, for enterprises, potentially over the next 5-10 years. This is also similar to what, by the way, Nvidia is doing on the robotics side with technologies like Groot on their open source robotics technologies that build on open source language models underneath, and also their dedicated robotic processors like Thor and so on. I've written a lot about this as well. So this again is a glimpse into this Google strategy for robotics where they want to be a foundational layer. And so that's why this is interesting, noting in the flood of AI things going on this week, and it's a key indicator of potentially a broader thing that it is coming. That takes us to our gadget AI conversation for AI Ramblings here on 57 Friday. The last couple of days, if you've been watching, I've been talking a lot for the last few weeks about how, and months, about how supply constraints, not just on AI GPUs, which is what TSMC is all about that we talked about earlier, but also memory chips from the big oligopoly of chip providers like SK Hynix and Samsung out of Korea and Micron here. Those companies also have the same kind of a Federal Reserve type throttling layer where they have to put on the capacity to make more memory chips for the world to use them, both in the huge bustling business of AI data centers where the big tech companies are investing hundreds of billions of dollars a year, and also on the consumer side for the hundreds of millions of laptops and smartphones that the world needs, that needs more and more memory to process the local inquiries on AI inference queries, the token generation that these devices need. And those memory chips come from these three companies that are just on the memory side. And there's a shortage, and I've written about this. This has less to do with global trade kerfuffles between the US and China and all the geopolitics around that and tariffs. This is more to do with just limited amount of global supply of memory, high bandwidth memory for the data centers. The fab capacity is being shifted, which means pricing has been going up. And I've talked a lot about this. The last couple of days, we saw Microsoft a couple of days ago, when we talked about it here on AI Ramblings, raise prices 10-20% or more for their new Surface line of laptops. We saw yesterday Samsung, one of the largest providers of Android smartphones, do the same thing with their S26 series of phones, where they raised pricing by $100 or more. And yesterday we saw Meta talk about their pricing is going up for the Oculus headsets, which they don't sell in huge volumes, but still a few million, definitely high prices. And so it stretches out the core AI mainframe computing thing that we've been seeing over the last 3 years of ChatGPT to more local processing of this data on our local phones. And so that will happen. It'll happen a little bit slower because of these price increases, because mainstream consumers ultimately do watch the price issues. So that is an issue to consider. So that brings us to one of my favorite sections of the podcast, questions from you all, AI curious folk. Today I want to entertain a couple of questions, and they kind of related. One is, of all the big hyperscale, the foundation model companies, the OpenAI, Anthropics, the Meta, the Google, obviously, Elon with XAI, who has the steepest hill to climb, as it were? And in my view, of all of them, if I had to rank them today, I think it's XAI. We talked about them earlier about building the distribution AWS style with potential demand outside of Elon's needs for AI chips and compute. Remember, XAI, all their users are within mostly X, or what was known as Twitter, a few hundred million very active users around the world, but it's not access to billions. And so one of the core things that Elon has to figure out is how to wrap that up. And his challenge is a lot more difficult relative to, let's say, Meta, who's also further behind in terms of the use of their Meta AI out there relative to, let's say, Google Gemini or OpenAI's ChatGPT, of course, which is brand leader around the world, and of course Anthropic's Claude series of products, which is quickly catching up. Like potentially becoming the Coke rather than the Pepsi of the Coke versus Pepsi battle between those two. And I've written a lot about this. But Elon has this challenge, and this is a question that he's going to have to answer a lot as he rolls out his mega IPO of SpaceX XAI / Terafab and potentially Tesla in there somewhere. And that's all coming up in June around his birthday. So this is the steepest hill in my mind that Elon has to execute on. And Elon, as we know, is very good at steep hills. I mean, he can probably climb up Mount Everest blindfold if you tell him that that's a great worthy goal. Gets him closer to Mars. Joke. Anyway, question 2. So who is most likely to sneak up the first on the mainstream billions? It's the opposite of the first question. In other words, it's a bit of a cakewalk, relatively speaking. And here I would continue to say Google Gemini. Apple is a very close second, but remember, Apple still is on devices on the computer side and smartphones that are 20-30% of the world's unit market share. But Google Gemini touches dozens of properties, Gmail, Docs, etc., that are each YouTube, of course, each 1 billion, 2 billion, 3 billion users and more. So Google Gemini being baked into all of this. And this week they had a number of initiatives on this, which I wrote about in yesterday's AI Reset to Zero post. Google Gemini is very aggressively executing. You know, a couple of years ago, people said, hey, Google is going to be left behind, just like, they're worried about Apple right now on this whole AI thing. Sundar Pichai, CEO, has turned out to be a wartime CEO, essentially, and he is executing. So I think there's a lot of hard work here. So this is not a cakewalk, as it were, where they just kind of jaunt into this position of mainstream billions. It's just that a lot of integration has to be done, a lot of work, and they're doing it. Obviously, as a user, I would like to see it happen faster, but they're doing it, and they're doing it relative to the positions of all the other biggie companies that I've talked about. They've got to do everything they've got to do further down the stack in terms of building the infrastructure, et cetera, and do what Google's trying to do. So Google continues to be best positioned in my mind in terms of mainstream users, billions. That's the thing I focus on. Apple, number 2. And then you've got everybody else behind, with Elon having the biggest, toughest road to climb. So those are my answers to the two sides of the same question from listeners today. And hopefully that helps you kind of think about this. So today's show, infrastructure, the first 3 layers of the AI tech stack. That's where the core discussion has been. TSMC, core player, the challenges for some of the AI players that we've talked about. And so that hopefully gives you a sense of this. Also, today's AI Reset to Zero post, 1059, talk about this continued tussle between platform companies and applications on top of them, the misalignment between operating platforms and systems companies and application companies, with a lot of historical analogies to Microsoft versus Netscape and others that you may find interesting, some charts and graphs, etc. So do take a look at that. It's separate from the discussion we're having today on this podcast. So remember, we're not here to deliver AI news. We're here to help you think through it. You are the AI curious folk. And I'm so glad you've been with us all this week. Today's Friday, so I want to wish you a great weekend and look forward to seeing you all Monday for AI Ramblings Daily on Monday, episode 58. So thanks and stay tuned.